In this video, let's talk about the type of royalty under the IT Act. And when I say type of royalty, what I mean is the definition of royalty. If you look at the definition of royalty under the Income Tax Act, there are various clauses, but principally these payments or clauses, if I can call them, can be classified into three broad categories. So there are three types of them. The first one are the payments which are made for the transfer of all or any rights in respect of certain category of asset. Now, this concept of transfer, which is enshrined as royalty under the Income Tax Act, is not subscribed to in most of the treaties that India has entered into. And the reason for that is very simple, because generally in case of treaties, payments for transfer are taxable as capital gain. But nevertheless, insofar as the Income Tax Act is concerned, certain transfers are treated as royalties. Now, for each of these type of payment, we have detailed slides later on. But for now, let's try and understand what are the kind of payments which could be covered as royalty. The second category is in respect of imparting of information. Now, this would be a case where, a person has a patent or some drawing, design, or some process, and he gives you an information as to how that process or that patent or anything else would work, right? And the third one is use or right to use certain assets. Now, suppose I am an owner of a copyright or a patent or a brand or an equipment for that matter. When I allow a person to use that equipment or brand or patent, etc., the payment that I receive from him is classified as royalty. Now, in 9 out of 10 cases, this is the segment which is found in most of the treaties. And this is the most significant part of royalty in any of the clauses in the treaty that you will see which India also has. Imparting of information is also covered in detail, but there are few items which are covered here. And like I said, in most of the treaties, payment for transfer of all or any right is treated as capital gain and is therefore not chargeable to tax under the head royalty. Coming to the definition of royalty under the IT Act, Section 916, Explanation 2 defines royalty to mean consideration, right? Now, when we say royalty means, that means that the definition is exhaustive. If a payment does not fall within the four corners of what we are going to discuss, then it is not taxable as royalty under the Income Tax Act. Coming to the use of the word consideration, here what needs to be seen is that what is the principal reason for the payment. What consideration implies is that effectively if I give something to a person, what is the reason for which I am making that payment, right? So if I purchase a plant and machinery, okay, and I get certain design as an ancillary which are meant only to ensure that the plant functions smoothly, the payment that I am making is for the purchase of plant and not for design. Of course, there could be certain variations in respect of this, and in certain situations, this may be classified differently as well, but the principal reason why this consideration is paid is not for design, it is for plant. So we need to see what is the main reason why the payment has been made, and that's the significance of this word consideration. Including any lump sum consideration, but excluding any consideration which would be income of the recipient chargeable under the head capital gains. 2 points which are conveyed out of this bracket part. The first, whether I make a recurring payment, right, or I get a lump sum payment does not make a difference to the characterization of whether a particular income is royalty or not, right? But whenever there's a lump sum payment, it should not be something which is chargeable to tax under the head capital gains, right? It could be a payment which is recurring, where there could be a deferred installment payment for a capital asset, which is chargeable to tax under the head capital gains. In both these cases, if the income is chargeable to tax under the head capital gains, it is not construed as royalty. And now let's come to the clauses. So consideration for transfer of all or any rights. I will deal with each one of them independently in the future slides. But what I want to tell you is why we have marked this in blue is this is the most significant part. So the payment could be for transfer of all or any rights, including granting of a license in respect of a patent, invention, model, design, secret formula or process or trademark or similar property. So if a right is being transferred, whether it is one of the many rights or whether it is all the rights in respect of any of these assets, that is going to be classified as royalty. Like I told you, in treaty normally transfer cases are not covered. Second, the imparting of any information concerning the working of or the use of a patent, invention, model, design, secret formula, process, or trademark or similar property. Right? So this is the second part that we discussed. How it applies individually to each one of them, that we will see when we come to each of these clauses independently. Third, the use of any patent, invention, model, design, secret formula, process, trademark, or similar property. So if I am allowed to use the trademark of a foreign company in return for a consideration, right? So if an Indian company makes a payment to a foreign company for the use of its brand in India, then those payments would get classified as royalty, right? The portion which is there on the top is the same which we had in slide 1. This is only for the ease of your reference. It's not duplicating. Let's come to clause number 4. The imparting of any information concerning technical, industrial, commercial, or scientific knowledge, experience, and skill. Right? So again, imparting. Transfer cases covered, imparting cases covered, use cases covered. 4A, the use or the right to use any industrial, commercial, or scientific equipment, but not including the amounts referred to in section 44BB. Fifth, the transfer of all or any rights, including granting of a license in respect of so many of them, right? And the last, the rendering of any services in connection with the activities referred to in subclauses 1 to 4, 4A, and 5. Now what this means is that basically when you are taking any payment which is towards royalty, right? In those cases, the payment when it is made for royalty, if there are ancillary services which are given, even those services gets classified as royalty. But there are certain exceptions as well. While this exception may not be very, very significant, but still, let's go through it. Lump sum consideration for the transfer outside India of or imparting of information outside India in respect of. So in cases where there is a payment which is made outside India, which is lump sum, right, for transfer or imparting of information for any data, documentation, drawing, or specification relating to any patent, invention, model, design, secret formula, or process, or trademark, or similar property, if such income is payable in pursuance of an agreement made before the first day of April 1976, and the agreement is approved by the central government, right? So this is something in respect of agreement entered into prior to 1/4/1976, which were approved by the central government. In those cases where the payment is of the nature in this paragraph, for which there was a lump sum consideration which was paid outside India, right? Those are not to be construed as royalty. That serves as an exception. Even though normally this would have got covered as a royalty under the current rules, there's a specific exception to carve this